Welcome back to Navigate Your Wealth. We were talking about tax-free options, and I've never heard anyone say this either, that there are 3 major tax-free options to get you to your goal. Let's talk about those.
There are only 3, actually. Tax-free municipal bonds, if you don't know, there's 3 types of bonds. There's corporate bonds, government bonds, and tax-free municipal bonds. And there's advantages and disadvantages to each of them. Obviously, the corporate bond is the corporations borrowing money, and they pay an interest. There's no tax benefits there at all, but typically the rate of return is the highest with a corporate bond. It's also the one that you have the most risk with.
Gotcha.
Government bonds, least risk, because they've got the printing press in the basement, is also going to give you some tax advantages, state income tax free.
Okay.
Well, then there's municipal bonds. So municipalities try and get some money also, but in order to get you to lend them some money, they have to bribe you. And so the way that they do that is by making it tax free. So if you live in a state like California, where I did for many years, and taxes are very, very high, there are California tax-free municipal bonds. So the income that you earn off of that bond is both state and federally tax-free. So tax-free municipal bonds are one option. Not one that we look at a lot these days, only because with interest rate fluctuation right now, bonds are getting slammed.
Yeah.
But the other 2 options are great.
The next one would be a Roth IRA. So many individuals have an IRA that they have either contributed to or converted their 401k to, but that means that the taxes are still due. With a Roth IRA, you pay the taxes in the front end, and then all of the time that it's in the Roth IRA, it grows tax-free. And when you go to take the income, so the distribution is also 100% tax-free. One thing that I will note is that a lot of companies today are starting to incorporate the Roth IRA into their 401k plans.
Good.
So if you are currently working, go to your HR department and find out, do I have a Roth IRA option through work? Now, when you look at the Roth IRA, if it's with your 401k, you won't get the tax advantage today. You're going to have to pay the tax. But don't you want that money to grow and be accessible 100% tax-free? You're not growing money for the government anymore like you're doing in your IRA.
Right.
One thing to note, though, is if you have a corporate 401k Roth option, the corporation, if they do a match, is going to match on the traditional side because they still want their tax deduction.
Okay.
So you'll have their match on the traditional 401k going to be taxed later side, but your Roth side will already have the taxes, and now all of the growth on that money will also be tax-free.
Is there like a magic age when you should, like when you can move your 401k over to a Roth?
I don't think there's a magic age for the Roth. It all depends on when you want to start spending it. So for those people looking at Roth conversions, if you can't let that money compound for a few years, sometimes it doesn't make sense to make that conversion right away.
Okay.
But again, that's all part of the analysis that we will do when we have that conversation with each individual. Again, everybody is an individual. No 2 people, no 2 families, no 2 couples are like any other that we have.
Well, and I love that you said that. And it's so important because with a customized, holistic approach that Compass Financial does, it's also the 2 of us working on creating a solution for you. You know, some of the problems or issues with big box is that they're trying to fit you into, you know, this 40-year-old is just like every other 40-year-old, or this 60-year-old is exactly like every other.
Nothing could be further from the truth.
Nothing could be further from the truth. That's a, you know, round hole, square peg situation. We want to make sure that you have an individual plan that will work for exactly what your needs are. And when it comes to a Roth, there are options to explore to make sure that you're doing it at the right age. You're making sure that you're converting the right amount. You know, we mentioned earlier that when we do Roth conversions, we typically look at spreading it out over a few years. You can do a Roth conversion in 1 year, but if you convert everything in 1 year, you'll be in the highest tax bracket.
Gotcha.
And so even though it's possible, it doesn't necessarily mean it's the best way. We want to look at exactly where those numbers fall based on your taxes so that you're paying as little tax as possible, even though you're paying on the conversion.
Yeah, and being independent, and you keep mentioning the big box, Rebecca, it allows us to have that individuality. It allows us to be able to find the right solution for each right client. You know, the third option we haven't gotten to yet, the tax-free, the cash value life insurance.
Cash value life insurance.
Yes, cash value life insurance. You know, it has a stigma about it, annuities and life insurance. Like, oh, because I don't know why, but it shouldn't.
Well, but I want you to jump in because you got into the insurance business and said, don't think I came here to sell insurance.
Well, that's true. That's true. That's true. In 1997, I partnered with an insurance company, and because I saw something that I couldn't unsee, and I knew that insurance was an opportunity as a solution. But I will tell you, and Samantha, thank you for bringing that up, because I spent the first year with this company trying to prove that I was right. That life insurance was all smoke and mirrors, and the only person that got rich was the insurance company. And nothing could have been further from the truth.
And what did you find?
Oh my gosh, I found that every person, I don't care what age you are, I don't care what gender, I don't care what anything, needs to have it as part of their foundation. Life insurance is not the problem. Life insurance, more times than not, is the solution. Life insurance actually makes everything else work better. And we'll get into that, I hope, in another episode.
Well, we could talk about that next week.
Yeah, let's do that, because it's going to take a lot longer than the time that we have left on this show to be able to do that. But life insurance, I was shocked of my discoveries. And I'll tell you, spending that year trying to prove how right I was and showing how wrong I was not only the best thing for me, it was really the best thing for our practice and for every one of our clients, because it made me so secure in my conviction that life insurance is an option. You know, I call life insurance a Roth IRA on steroids.
Really?
You want to know why?
Why?
Let's compare the two.
Okay.
A Roth IRA, you use after-tax contributions to make your contribution, your after-tax money to make your contribution. Life insurance, same thing. You've already paid the tax on the money when you make your premium. Both of them can grow without tax. Both of them allow you to take the money out tax-free. That's about the last similarity.
Yeah.
Okay.
Life insurance has a self-completion clause.
So when you die?
You make one premium payment and die. We're sorry, we're going to miss you, but that death benefit is being paid to your beneficiary tax-free. The Roth IRA is only going to be the balance of the account on that day.
Interesting.
You know what else?
What?
What if you need the money early? With
Can
your
you
Roth
take it
IRA,
out?
you can't access it before
can't.
59 and a half. But, well, and there is a little caveat to it.
There's some stipulations on that.
But there is some restrictions on when you can access it. But cash value life insurance, the minute there's cash value, it's yours. We call it the bank on yourself, right? You want to build the Bank of Samantha. I want to make sure that I have cash that is accessible to me.
See, and I didn't even realize life insurance had a liquidity or a cash
component.
accessible.
And I know we're going to run out of time
are.
again. But you know, with a Roth IRA, if you make a distribution from your Roth IRA, you can't put it back. With life insurance, the Bank of Sam, the Bank of Rebecca, the Bank of Karen,
you can put it back.
I can take it out, put it back, take it out, put it back, take it out, put it back, and it's tax-free. And I don't even have to report it on my tax return.
Oh, I love that. All right, it's already time to say goodbye. Let's write that number. We promise we will talk about insurance, life insurance next week. But let's give that number and one more invitation, Sam.
Thank you so much for joining us today. And I hope you come back next week so that we can learn a little bit more about that life insurance. But if you got anything out of this, if you want to understand how the tax burden for your retirement will impact your ability to live the retirement of your dreams, pick up the phone now, 855-348-3073. We want to run your retirement roadmap. We want to look at the costs that you're paying for your retirement plans right now. We want to look at the taxes that you'll pay over your lifetime. We'll look at the risk that you're taking. We want to help you eliminate all of those risks.
Fantastic. Thank you, ladies. And we'll see you again next week. Thanks for joining us on Navigate Your Wealth. Be sure to email us with your questions. We'll take some of those next week, too.